Hey, what's up, y'all? We finally made it through another month, and we are ending the month of April in the green. A really big difference from last month in March. If we can see the total trades for the week, um, two trades, seven trades, five trades, seven trades, five trades, and then you compare it to my March, and it's just like 16 trades one week, 28 trades one week. It is just like a vast, vast difference. And this pretty much boiled down to selectivity. And when I did have the conviction in certain setups, I did size up at the right times. For my overall equity curve, I am curling back to the highs, which is a good sign. We kind of have this trend line right here, three touch, and I am approaching it again. So far, my overall equity curve is looking healthy. And when we boil into the stats, I took 26 trades this month. I Another big thing is the largest gain was $211 compared to the largest loss, which was just minus $30. You can see I did have five max consecutive losses in a row, not max losses. This is more or less because the way I trade, once something gets to about 1 hour from my entry, I raise my stop to break even. So perhaps I could have taken a little bit of slippage on the break even trades. If we look lower, our profit factor is 4.02, which is really, really good for me. Something I have not seen too often in the past. Right now, my average daily gain is $39. This is something I am continuously trying to increase. The first goal is an average of $50 a day. The end goal is average $300 a day out of the past 20 trading sessions, and this would cover my financials, all my costs, and everything. So if we break it down, $663 gain. I do pay I think $75 for Trading Sim, and then minus another $50 I think for TraderView. So overall, I would be about 500 on the month covering those trading costs. Uh, this right here does not cover my living expenses, which is also another you know tough. I do work part time just to cover the basic expenses, but I really need this number to increase in order to just start living comfortably instead of really living check to check. So here are the list of trades for the month. I'm going to go through each one individually, break them down while I was watching the idea, some nuances about each one, perhaps mistakes I made on some other trades, and then I think at the end I'd like to go over the top opportunities for the month, which actually I probably should just make that for myself in another video because it would stretch the video long. Um, so I guess at the end of this video, I'm just going to go over my goals for the next month and how I can get to at least an average of $50 a day. All right, so starting on CRWV for April 1st, the reason why I really like this idea was it was a recent IPO, and the previous day we had NMAX had a huge IPO day, which I thought ignited the just kind of like the IPO sector. I know it's not a sector, but just like it made IPOs kind of hot. And Newsmax was a really common household name as well, so I think it had a lot of eyes on it. This setup did have similar vibes to me on Palantir day 3 of its ER. So with CRV, you can see we have a big volume day for day 1. We break below day 1, and then we close right at the lows. And here on day 3, we break to all-time highs, and that's when I started getting really interested in the setup. So we are officially at all-time highs when I'm getting interested. We had a really nice 2 hour of consolidation. Let me see if I can zoom this in. And we held above VWAP, and price was getting really tight. And unfortunately, at this point, I was at work, so these trades were actually on the phone. What I really liked is that it broke this pivot. I was too late on the phone to get the initial break, but I did get lucky and was able to get filled on the pullback here. Now, the reason why I re-entered was first, I really like the idea of IPOs being hot, but the entry point for the new high of day, I would have been able to bring my stop to break even on my first trade, which is pretty much the previous bar's lows. So that's why this month I've really been focusing on adding to my setups. Pretty much I enter on a higher time frame, and then on the smaller time frame I look to enter new highs. bringing my stop really tight. On my first entry, my stop was at the consolidation low, and on the second entry, I was able to bring everything up to 45, 60s. And yeah, I pretty much top ticked the first leg up from this move. Like I said, this was because I was at work. Low key, my boss was kind of behind my back, and I just wanted to be out of the trade. If I had followed my rules, my stop would have been at break even, and I would have been using the 90 MA to trail. So we did get the close below the 90 MA, and nowadays I'm not really a stickler putting my stop right below. So I believe I would have been able to stay into the trade until the close. Let me. I forgot how to turn. Oh, there we go. All right, there's the pre-market action in after hours. So yeah, I really like my entries on these. Unfortunately, I wasn't able to capture the full move into the close, but all things considered, I was able to capitalize on this. I can't emphasize enough that NMAX, I think, really helped this idea. IPOs have been dead for quite a while. And yeah, I locked in about almost a 2R gain on this one. Going into April 3rd, I played SOXS, which is the semi-short. It's the inverse ticker. Some pre-market notes I have is there was only one stock in the gap up, and it was random. Tariff news hit yesterday. I think Apple was a solid short ETF name, and I was looking at semis to begin with. Now, I didn't really. First off, I realized I messed up on the share size on the calculator. I should have risked way more. This is a bread and butter for me. You can see that SOXS is breaking to all-time highs. We have a clear level being broken. First, we break it once, we pull back, flag out, really nice flag out, and then we catch pretty much everybody off guard the past 3 days. You can see they were selling, 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 and then we gap up above the range, which was very, very bullish for me. Boiling down to the 3 minute, I think this is messed up right here. So this could have been a really, really big trade for me. One, I should have gotten bigger size, and two, I did not add at 34s. You can see we test VWAP, and then we kind of grind higher towards pre-market highs, and then we started to get really tight. Now, a big plus for me is that pretty much price worked right away. Not extending too much, but we did break past pre-market highs. And then we started to flag out above pre-market highs, getting tight. And I think this would have been a great entry point at 34s. And I also should have stopped guessing what the price action was going to do and just trail out. This first sell right here was respecting the bar by bar, so I thought it would be good to take a little size off. This was more or less emotional. It seems like I couldn't hold my position, which is something I have to revisit. Had I respected the 90 MA, I probably would have closed out around here, 35.20s. So this is something I have been replaying a lot on Trading Sim. Like I said, SOXS is a high ADR stock. The semiconductor sector in general has just been providing really clean opportunities, focusing on SOXL and SOXS and not getting chopped up on, say, just focusing on NVIDIA. And this definitely could have, if I had size bigger and I got the reentry, because look, when I take the reentry right here, I risk previous bars lows, and I'm pretty much break even on this first entry. So that allows me to get really big size. This could have easily been a 350 daily stop, 350% daily stop win. I constantly think about this setup. But yeah, overall, I was able to capitalize just a little bit on it. As you can see, I locked in 2.6R. The only problem was I did not bet, and I messed up on the sizing. So these next couple of trades that I'm going to go over for April 4th, they pretty much have all the same setup. One thing to learn from this is whichever I have the most conviction in, perhaps I should bet bigger. Had this not gone my way, I would have taken 3 losses across 3 different names. I spread it out through a China name, BAC, which is a bank stock, and also Apple. But these are going to be reversal trades. Going into the day, we were pretty bearish. The Qs were nearing 2024 lows. We got a big drop in the PM after China said they will impose a 34% tariff starting on April 10th on all imports. We're in the midst of the tariff battle right now. And pretty much why this play was a little risky was this wasn't the classic first green day. This was just like an overextended gap down, in my opinion. One thing I liked about it was we did break pre-market lows on a flush. Once we broke it, I started to look for my pattern signal, which is pretty much a green bar after a series of red bars retracing more than 50%. Right here, we did see the buyer step up, and I decided to sell all into VWAP. And I was not risking that big on it either. You can see it's the same thing with the Apple trade as well. You could see across like a lot of the names that all the price action looks similar. And for Apple, I sold into VWAP as well. I put exhaustion gap after yesterday's sell off. And then with BAC, same thing, same exact thing. All right, so going into Monday, April 7th, this was, sorry, might cut out. This was a career maker, and I did not focus on the right names. I mean, I did focus. You could pretty much buy anything. The only problem was I should have been focusing on TQQ, which I'll pull up. But I was playing FAS, which is the bank sector stock. And as you can see, we have two really big down days, something that was just crazy in the overall markets. This type of percentage move this fast, you don't really see it, especially on bank stocks. But we had one gap down, two gap down, and finally on the third day, we had a third gap down with a sell off, which was really, really critical. And like I said, we got the sell off in the morning. We saw the buyer stepped up. I entered previous bar highs, risking previous bar lows, and I was trailing with the 90 MA. Because of that, I was able to capture this move that came from the 90-day pause tariff announcement. However, this announcement was a rumor. Later on in the day, the White House confirmed that it was a rumor, and just a really, really nice risk to reward opportunity. I locked in 3.39R. Let's go ahead and pull up TQQ. All right. All right. Here we have TQQ. You can see that we were down about 41% during real time hours, which is pretty drastic on the Qs. Now, if we measure the risk reward, this is just an insane opportunity. And I say that because this was super, super liquid and definitely something that you could size really big on. And you just don't see like these 5R type of moves in such a short amount of time. I think TQQ was the play. I think just with the tariff geopolitical news, I think it was just important to focus on the overall market. Like I said, this move, this drop down was historical. And also another thing from this move, it proves to us that we are very reactionary to any type of tariff announcement. And yeah. So yeah, thank God I was able to participate in it. If not, I would probably KMS or something. Like this is just, it was a great learning experience. I went on trading sim to practice out the TQQs. And a reason why I like size kind of small is these reversal patterns are new to me. For so long, I've been playing momentum patterns / breakouts, and to finally figure out a system of where to enter and where to risk for these reversals, it's been growing on me, and the reps have been continuing, and just the overall learning. Because, like I said, I am a bar break type of trader. I don't buy into zones. The bar needs to break, and I need to risk some type of price action structure. But yeah, let's go into April 8th. So obviously yesterday we had the 90-day tariff pause rumor, and I was looking at YINN, which follows FXI, China large caps, because it had yet to bounce. I was planning for a sell-off, and when I got the sell-off, I took the reversal pattern. Fortunately, I was able to cut when I saw that price wasn't working. I also didn't risk this much. I also didn't risk that big. But one lesson is that, I can't be playing the same type of pattern after such a big reversal day yesterday. Even though it failed, it kind of just ruined the linearity of the setup. I think I was just too eager after not being able to capitalize the most from yesterday. But that day I was able to keep it small. Going into April 9th, I did take 3 trades kind of at break even. I had that we got some pretty big news from China as they were raising tariffs on imports from 34% to 84%. Another major news is that crude oil was hitting a multi-year low. The tariff news from overnight made FXI start gapping up. And I am just, you can see that I was just taking random trades. First off was the Oxy trade, which was completely random. I was trying to play the first Green Day reversal on the daily chart, thinking that, okay, because oil hit multi year lows, maybe it might bounce. But as a lot of other traders have echoed, these commodities don't work the same as tech stocks and whatnot. My idea ended up being right, but my trade management did not allow me to capture that idea. Plus, I was a little bit um, just I didn't like being below break even while price was just chopping around. And you can see that we had a pretty big price movement towards midday. This price movement came from the actual 90-day pause from the White House. They did confirm that there is a pause, and it popped a lot of things in the market. One of the things that it popped was RCAT. I mean, it popped so many names, but I didn't find RCAT on the scanners. I had set an alert at this pivot. The pivot got broken when we got the tariff news. I did see that we were flagging out. Set up my pattern. I entered the pattern. Price went 1R, and I was able to put my stop at break even, which saved myself from a big loss. Overall, this trade was random. I think this type of opportunity was definitely a breaking news sort of trade. My news usually hits 3 minutes in, which is not good. I'm usually late to the party. One scalp I did try to take was AAPL. I considered this a breaking news trade. I was pretty much in and out. Um, I do realize this type of playbook deserves different type of trade management. And after I took this trade, I was slowly realizing like I can't just use my bread and butter patterns on it. Like I need to boil it down to the 1 minute because I used the three, and need to figure something else out with that. For April 10th, I did take one trade on SOXS. From the news yesterday, we did get a historical, I think, 12% move in the Qs, which made me look for a day two reversal. Honestly, I didn't think we could continue going high. I didn't think we could go higher. As you can see on the Qs, we just had a crazy daily candle. And the reason why I was more on the day two reversal side for me was because we had the declining 50, we had the declining 200, and price just closed. Yes, it closed so strong, but it didn't really give time to consolidate. So I was thinking, maybe we pop a little bit, but we're going to flush back down, which is why I looked for short opportunities. One of them being SOXS. Let's see. All right, so in my notes for SOXS, I was actually looking for a reversal. I was looking for a reversal around pre-market high, previous day high, or previous day's close, and we got none of that. Instead, we got strong momentum out the gate. We broke pre-market highs, and we began to flag out just a little bit, enough to build a range, and I went ahead and took the entry. Price went 1R, and then I stopped out for break even. What I found very interesting was the range that it started to build right around my previous entry price. This is something I've been practicing and trying to look for nuances as to when to re-enter on an idea that you originally had, but it stops you out. One thing is that it did hold VWAP, and we were building higher lows on declining volume, which gives more probabilities for me that perhaps I just got shaken out. I was able to capture the next leg up though. When we broke the highs, I did notice the run up and got really lucky that price pulled back. If I'm going to be honest with you, my order was already set by the time this candle was here, which would have not been good. That pullback just put more odds in my favor that it would actually work. That's what I need to work on. Like after I see this price action, then I need to put my entry. I don't need to put my entry right away if it's just like grinding up like that. Um, Another trade where I was trying to read the price action instead of just follow my rules. It wasn't a bar by bar exit and it wasn't a 90 MA exit. But something I find ironic was if I were to use the 90 MA, price would have closed right here and I actually would have stopped out for the same amount, the same level that I exited at. If I am going to play momentum on day two reversals, something that's so important for me is pre-market high being broken, or inversely pre-market low being broken. I did have strong conviction in this trade, although I wasn't prepared properly in the pre-market. That sounds like a tongue twister. I was able to size up just a little bit, risk $70, locked in $55. but our amount is just not that good. Going into Friday, April 11th, was my dust trade. And this I definitely need to break down. The main mistake for me was I was playing Dust, which is the gold miners ETF, bearish ETF, while I was following gold, GLD. But I should have been following GDX, not GLD, because GDX is the gold miners ETF. And I did chop myself up for not that much money, but I shouldn't have taken the trades to begin with in the course over the course of next week because I was watching that potential first red day on gold, and like I said, it's a commodity, really hard to trade for me with my style. So, sheesh, I should have just avoided this. Plus, it wasn't even like 3 red days down. I'm trying to buy the gap exhaustion gap down on the third day. So you can see that we got the sell off out the gate. Um, Buyer stepped up on this candle. I entered off of this candle, previous bar highs, risking previous bar lows. And right after the entry, we were just struggling right at VWAP, or I'm sorry, the 90 MA could not break above it. And yeah, I went ahead and closed out of my position before my stop got hit, which it didn't. But either way, I would have stopped out at break even. I don't even care if like this trade would have hit, just because this is not the type. I just shouldn't be in this to begin with. I forgot to do my due diligence in the ETFs and what they track. All right, going into April 14th, we took one trade that day, and it was Apple short. Unfortunately, I was not able to capture the potential of this trade. I really like this entry that I took right here, and I actually added on this setup at the new high day break, risking previous bars lows, and I got tagged out. What I failed to do was take a potential re-entry from here. Let's see if I can draw a level. So yeah, from here it broke new high. It broke high a day. I get stopped out from the ad and also my other position at break even. But you see that we hold this level, and from there we just curl up. If I were to take a re-entry, it would be above. It would be at the same spot. I'll be looking to enter 1684, risking this candle as well. And price acted pretty choppy when I entered, but pulled back to the moving average and just grinded higher. If we look at the daily, let's bring up the daily here. Here you can see, I mean, keep in mind this is the inverse, but we gap down, and I'm trying to play it as a gap down reversal into support. On April 15th, this was sort of a risk-off environment. No real news today. Metal names were moving, precious metals, based off Trump's plan to stockpile deep sea stuff. A lot of bank stocks reported this day. I tried to take a stab at USAR for a day 2 continuation. I got filled kind of poorly here, and I really wasn't convicted in this setup and just took a small loss. April 16th, the U.S.-China tariff war continues. The U.S.-China tariff war continues. Sorry, administration levied 245% tariff on China now. Gold was hitting all-time highs. U.S. export restrictions halted shipments of H20 graphics processing units to China. So that's what moved. That's what moved the semiconductor sector. Looking at Oxy, I did size up on this trade. Or I'm sorry, at SOXS. I did size up on this trade. I really like the news. I like the level that we were breaking at 2750s. No, I apologize. I just thought with the news, I think that it was pretty bearish. So what I see here is we test the after hours highs, we chop around for most of the day, and then we finally get the clean move. And we pull back to the rising moving average, and I am entering at the high a day break. And I sold around this. Okay, so on my notes, it shows that Jerome Powell was actually speaking, and which caused the markets to go down, which is why this inverse went up. And I was focused on the semis because of the H20 news. This was actually a pretty clean trade. I believe I exited this trade. I exited this trade when the Qs were putting their highest volume on the 5 minute, and I thought that's what was going to signify like kind of like volume capitulation. And so that's why it looks like top tick exits instead of selling all at the break and hold below the 9 EMA. So got pretty lucky, but also turns out I made the right move. DUST, another mistake where I was using the gold instead of the gold miners. I was looking for a gap down reversal. So far, I'm performing pretty poorly on gap down reversals. I am recording this kind of into the month of May, and I've been taking gap down reversals in May as well, and have not been successful with them. I also took OXY. This setup was actually really nice. Now the daily chart wasn't that good at all, but I saw this range being broken at 38.80s, and pretty much after this trade, I was like, man, like I'm just kind of done with commodities. It's just a little bit too hard for me to trade them with my trade management style. And yeah, for the rest of the week, the 17th and the 18th, I took no trades. So let's go ahead and look to April 21st. I took one trade. Looks like I got around break even. This was a start of the new week. Netflix was reported earnings after hours last Friday. Gold breaking to all-time highs once again, while the dollar's at a 3-year low. Reuters reported Huawei preparing new AI chips for mass shipment as an NVIDIA alternative, and I thought that was pretty bearish for NVIDIA. So looking at this trade, this was another inverse. I really like this consolidation right here, and it caused me to size up pretty big just because the price action was tight. And I ended up taking an ad as well at the new high day break and pretty much stopped out at break even once we failed to go higher. Overall, I really like the trade management on this. I like that I was unafraid to add on an idea that I had strong conviction in. Just unfortunate that the trade didn't work out. So going into the day on April 22nd, I was looking at Meta for a first red day. We were 5 red days down. We broke the tariff pivot lows. We were at like day 3 of the antitrust hearings. And so I was looking for pretty much a break of pre-market highs for my setup. And I was also looking for a reversal as well. Actually, for like these first green day reversals, I am looking for an intraday reversal rather than longing momentum. Unfortunately, I got caught up in the momentum pattern here, and I took an entry and exited close to break even. What I failed to see in real time was the low of day break, was the undercut and reclaim of the low of day. So if I were to take a reversal, it would probably be right here on the 5 minute. It shows my signal though. We have I think like 5 red bars down, and we finally get buyers stepping up, breaking the previous candle with the bar turning green, and I would be entering previous bar highs, risking previous bars lows. That would have been a pretty nice trade. I also took Bitcoin. IBIT was finally above the 1-day 50 MA and it was breaking a daily pivot. Gold was finally catching weak flows, even though it was making all-time highs. It was just definitely losing steam. Bitcoin volume also popped up yesterday. I was looking for a break and hold above pre-market highs for my pattern, and we pretty much got that. And this would actually have been a good trade had I sold some after I added. This was actually a pretty clean pattern for me. We have the high a day break, which I enter. Then we start to consolidate above, setting up one of these patterns that I like for a new high day break. I enter and price immediately. It goes underwater, but it does find support on the rising 9 EMA, still giving me conviction. What I failed to do was sell some at the break of previous bars lows. You can see we respected it 1, 2, 3, 4, 5, 6, 7. I was just looking for a bigger move. I think at this point I was trading my P&L, and I was able to lock in a decent profit, but just trying to play the chart, I should have taken more off near here. And this is what I'm noticing too recently, that after I enter the original breakout and it pulls back, usually it seems like sometimes the bars respect the prior bars. And I should definitely be taking profits once this closes and then hold some until the close of the below the 9 EMA. So April 23rd, I took 2 trades. We were gapping like 2.8% on the Qs. I was looking at PLTR because it was right above the $100 level. I used PLTU as the proxy. Today, Trump said he had no intentions of firing um, Powell from the federal chair. So I got a pretty decent base hit on PLTR. Now, in hindsight, I think this was a pretty important break, and this is definitely a day where I could hold a core, where I could swing on the daily on this. We just had a really clean break. Yeah, that's pretty much it. Just a solid technical level with the overall market catalyst. My MSTU trade though was definitely an overtrade. I do not play reversals on these type of setups on the daily. Um, what lured me in was I saw the low of day break, I saw the next low of day break, and then on the third, when with this big green candle, I thought the buyers finally stepped up, and I set my order above previous bar highs, risking previous bar lows, and I closed out before I hit my stop because immediately price started to lose steam and just fall, and I just wasn't convicted in the trade at all. I did risk low, which is also another hint that I had low conviction on the trade. So going into April 24th, this was actually my highest grossing day. I really made some good money on PLTR day two. Real quick, I took a silly trade on SOXS. I try to play a reversal when this is just a random daily. It's not a series of red days down. We just had a gap down and a sell off, and I thought I was just mainly concentrated on the price action. And I got very, very lucky that I was able to exit out of break even. Um, when price didn't start to work, I stuck to my stop, and then we kind of consolidated around my break even price, and until I just couldn't, I pretty much couldn't take it anymore, and I closed out around break even. But looking at PLTR, this is a classic day two pattern for me. First, we have day one breaking the range, kind of closing doji, kind of closing below the range, and day two is when we actually break out. And one thing that I really liked about PLTR was the clean move up, showing that the buyers are in control. We did test VWAP once, and we just started to get really tight for at least 2 hours. And right before, so for me, I'm big about bar closes. And when we broke the highs right here, we broke out right before the 2 hour bar closed. And so that's the reason why I didn't buy right here. I waited until after one, and once I saw that price was still setting up, I entered at the highs. Now, what you can't see here clearly was I added as well. So my first entry was the break of this level, risking the pivot low, I think, at this level, and it set up like another flag pattern for me. We have a move up, and then we have a consolidation, and that's where I look to add at the new high of day, risking the previous bar's lows. So my stop was pretty tight. As when I hit the ad, I also brought my break even, or I also brought my first entry stop to the ad's stop out. So it was pretty much a risk free trade. I was only risking the ad, which I think was about 30%, 25% daily stop. And immediately price works in our favor, and then it pulls back. I had When it started to pull back, I was like, oh man, I didn't want to stop out of my ad. So I think I raised my stop around this level. And sure enough, price bounced back up. We broke highs again, but we continued to pull back, and we respected that level that it respected this pivot. So I didn't finagle the stop, thank God, after this, and I left it in its place. And sure enough, price tests it again, and then it starts to go up. And at that point, I decided to take some partials into strength. And then I was using bar by bar lows to exit the rest of my trade, which is where we got right here. The 3 minute finally broke the previous bar's lows, and I exited out fully. And it seems like I made the right move as price did not continue higher. Because at this point, I have to ask myself how much of the move can like really happen. I understand this is a bullish stock, but this is also a mega cap, so it's not just going to make a lot of point move in a day or a lot of percentage move. But yeah, so that I had a pretty good week for because of that trade. I think I can see pretty clearly those 2 hour setups for me. and it gives me time to, think if I want to enter or not, if the price is getting really tight. And another thing I like about the setup is they offer ad opportunities. So going into week 5 was a very short week. I did take one trade, which was break even on Tesla. Oh, yeah. Okay. This is definitely something I wanted to talk about. So I was very bullish on Tesla. I thought it was going to be a day 2 continuation. We had broken the tariff pause highs and closed bullishly above it. And if you look at the intraday price action the day before, we just got really tight. Sorry, I lost my train of thought. But the catalyst on Tesla was the autonomous tax leniency from the administration in the US. So I was very bullish on that. I got to bring up Thinkorswim though to showcase the daily. One second. All right, so here we have the daily chart on Tesla. We break the tariff pause highs and we close above the 50 moving average. But right above us, we have the 200-day simple moving average, and we also have another pivot at 292. And this was the result for the day. We rejected it, and then we actually sold off. Now, instead of thinking that this was going to be a day 2 continuation, I think the price action on the daily kind of shows me that I was a little bit eager. We did have a move up into this level, and I actually should have flipped my bias on it. But anyways, I set my entry above previous day's highs, and I get triggered in, and the price reacts bullishly off of it, and it actually hits 1R for my entry because I risked around this consolidation low, and it immediately rejected. Now, because of my plan, once it hits 1R, I set my stop to break even, which fortunately I did. What I failed to game plan in the pre-market was a potential reversal scenario, and this is where it would happen. I could play it 2 ways. First, I can take my main entry at the break of low of day. We have a decent consolidation surfing the declining 9 EMA. So this could be entry number 1 for me. And entry number 2 would be this ad right here at this bar. So I would enter here risking, I believe, 1075, and then I would be looking to add at the break of previous bar lows, risking previous bar highs. So my stop, yes, it would be a little bit below break even for my first entry, but if I don't put too much size on that ad, then I would feel comfortable with it, I think, in real time. And as you can see, we just have a really nice flush to pretty much about halfway of the previous dailies bar. And let me pull it up on Thinkorswim. I'm going to pull up TSLQ, the inverse ticker. Here you can see my general pattern right there. I would be entering this bar. So we have a strong move. We have a doji bar closing within the previous candle on declining volume, and I would be buying the break. So if we look on the 3-minute, you can see I would be entering at the high of day break, and then I would get my next signal at the next bar over. And I would be risking this previous bar highs versus previous bar lows, which goes to about 4R from my ad entry, and my original entry closes around probably about like 1.5R. So all in all, this would be a pretty big trade for me. I definitely playbooked this, and I was just conscious going forward about my thinking, kind of like forcing a setup, but just just seeing that not everything aligned, and that if I see resistance, a popular moving average and price action resistance, I need to respect it, as well as looking to the left of the chart, seeing how we got to that level. So this was a great study. Unfortunately, I was just on the other side. So on the 29th of April, I took one trade. Oh man, okay. So I took Tesla again on this day, and here's why. For some reason, I was just like so enthralled with the setup. I was just a little bit tunnel visioned, and real quick, you can see that I enter at the same level of day 1, but by this time it was day 3, and we had already broken that level from the previous day when I tried to play it. And this was just such a big variation that I shouldn't have taken this trade to begin with. Because that was floating in my mind, I did risk small on it, and you can see I took the full stop out. Was just fortunate enough to risk small, but going forward, this is something that I just do not want to take. I thought this was a flush out on day 2 when I tried to enter, and that price was actually going to go higher on day 3, but that just wasn't the case. And yeah, that was a bad close to the month, but overall, I am very happy. I'm very happy with how I performed this month. This brought my equity curve up to above break even for the year to date, and it definitely brought up some concepts I want to apply going forward.
So yeah, going forward, my goals for next month are going to be implementing a conviction filter on the for my daily goal. I'm going to be rating every potential trade before entry. I really want my conviction to be 8 out of 10 or higher, or else I'm going to skip. And I'm going to keep a log, just a pass or a fail if I stuck to this. I think this is really going to help me bet big in the future, especially on trades that I have strong conviction in. At this point, I'm not really trying to risk less than 50% daily stop on an idea. I'm just trying to, focus on the bigger setups so I can have I'll have that mental capital when they do present themselves, and I can just slam the bat hard. I'll also be continuing to build out my first green day reversal playbook. 1 week out of the month, I miss setups like meta and bull. Those are really big setups. They just made sense to me. They were easy money trades. I'll be making a checklist, confirming certain things that I want to see in the setup. And I have been slacking, but I do want to continue with the deliberate practice and system building. I want to keep on making these video reviews of past trades, especially on the ones that I missed. So just so I can, get those practice rep ins. Um, I think, a good amount of this month was attributed to my pod, as well as just doing deliberate practice on Trading Sim, just replaying the setup over and over again, just kind of saying what I like about it, how the price action is forming. I think this is great practice and something I should have done years and years ago, but I was just late to the party. But yeah, that pretty much sums it up for the month. Um, Thank y'all for watching, and I'll see y'all on the next recap.